Hello, everyone. Today, we'll break down the main commodities market assets, take a look at the current situation, and highlight the key points that I hope will help you make well-informed trading decisions. Let's get started. And today, we'll start with silver. On the daily chart, the levels and trends remain relevant. The price continues to move within a downward trend and has now broken through the lower level, which had previously held the price from falling several times. Sales volumes had been increasing up until today, and it'll be interesting to see whether the level was broken to mislead traders or if this is a real breakout that will continue to pull the price down. Based on what I see, I can highlight two main scenarios for how things might develop. The first is, if this is a real breakout, then we should expect a test of this move. And after that, I'll be expecting the price to move into the range of around $50. And the second scenario, if we're being misled, then in the near future, we'll see the price return above the level and then rise at least to the upper boundary of the downward channel. But for now, it's too early to talk about the second scenario because the buying volume is still minimal. But everything could change as soon as tomorrow. That's why, for now, I'll consider the scenario of continued decline as the priority. Now let's turn to the hourly chart. The smaller scale also confirms my assumptions about the further decline in the asset's price. The breakout of the level happened with fairly high selling volumes, and the current price increase isn't supported by volume. So for now, we can confidently call this move a correction of the previous decline. For those holding long positions, let me remind you that the asset is in a downtrend and has also broken through an important lower level. I can't say anything positive about your position, and for those in short positions, the situation is simpler here. The price is in a downtrend, and a continued decline in the asset's price is much more likely. But, as I mentioned earlier, most likely in the near future, you'll have to wait out a correction to the broken level. Next, oil. On the daily chart, selling pressure continues, but in recent days, the price has stalled a bit. First, because it reached the closing of a historical gap, and second, there was a slight reaction at the $75 level. I'm not a fan of trying to catch reversals, but a lot suggests that from this level, the price is very likely to go into a correction and most likely to test the previous level. I think the situation will become clearer in the near future. I'll refrain from making any graphical predictions. Next, let's look at the hourly chart. Since the last review, the assumption about the asset dropping to the lower level has been confirmed. That's just great. Now, regarding the current situation, after buyers reacted, the further decline happened without significant volume, just by inertia. And up to this point, I haven't seen any significant selling. So my assumptions about the start of a correction are valid, but they'll only be confirmed after the asset's price breaks through the nearest high. Let's highlight it. In other words, if the price breaks through it, I'll expect the price to continue rising to the range of $85 to $87, after which I'll be hoping to see a reaction from sellers and a renewed decline. But I'll say it again, trying to catch reversals isn't the best idea since the price is in a downtrend. The probability of the decline continuing is very high. So for those who are in long positions, I don't know why you're still holding them. Only the start of a correction might give a short-term effect up to the test of the previous effort. And for those in short positions, everything is still in your favor for now. You might have to wait out a correction if it happens at all. It's important to remember that after any significant move, a correction is inevitable. Next, gold. On the daily chart, we continue to move within the downtrend. Once again, the prices approach the significant round level of $4,000. For now, sellers are still leading in terms of volume. They keep putting on the pressure, and it's quite likely we'll see the asset's price drop further, at least down to $3,750. Overall, the situation looks like this. If the price doesn't hold at $4,000, then the $3,500 mark becomes a very realistic target. Now, looking at the hourly chart, after the last review, the price reached the $4,000 mark, then went into a correction and tested the previous effort, after which it continued to fall. I want to point out that at the current level, I don't see any significant selling, so I don't expect a breakout in the near future. It's quite possible that the price could rise in the short term, If the nearest high is broken, then we could see the price move into the $4,200 range. But if selling pressure starts and the price settles below the $4,000 level, then I will expect the asset's price to drop further, at least down to $3,750. I'll mark my expectations on the chart. So for those in long positions, don't forget that the price is in a downtrend. These are already significant risks. At the moment, only short-term success is possible. If the price breaks through the $4,100 level, and for those in short positions, overall the situation is in your favor. The only thing I don't like is that during the attempt to continue the decline, there weren't any significant sales. Maybe we'll see that in the near future. The most pessimistic scenario would be for the price to keep moving sideways within the range. Next up is Palladium and its daily chart. The price continues to move in a downtrend and is still heading toward its lower boundary. In the previous review, I mentioned that I see the global target for the asset in the price range of around $1,000. At the moment, nothing has changed. Recently, there has been a lot of buying volume, but it hasn't led to anything, and it's significantly less than the selling volume. So for now, there's nothing to suggest a change in trend. Next, let's look at the hourly time frame. After testing the previous effort, the price continued to fall, and right now we're seeing a correction of that decline. This correction will most likely end in the range of $1,250, after which I expect the decline to continue toward the target of $1,000. So for those in long positions, at the moment all the indicators are against you. I can't say anything positive. And for those in short positions, the market is still on your side for now. I think we'll see the asset price continue to decline in the near future. The key level is the nearest high at $1,350. If the price consolidates above this level, it will be a signal to close short positions. So that's roughly how I see things playing out. And if you think differently, let me know in the comments. And don't forget to like and subscribe to the channel so you don't miss future reviews. I hope this was really helpful. And remember, we make predictions, but the market decides.